To the press conference for the launch of AMRO's ASEAN+3 Financial Stability Report 2025 or AFSR 2025. I'm Lin Tan from AMRO's communications team, and I will be moderating today's press conference. Here with me today are Dr. Dong He, AMRO's Chief Economist, Dr. Abdul Rahman, AMRO's Deputy Director for Functional Surveillance and Research, and Dr. Ranchana Pongsapan, AMRO's Group Head for Financial Surveillance. In a short while, Ranchana will share key findings from the AFSR report and the quarterly update of the ASEAN+3 Regional Economic Outlook or AREO update. And after that, we will start to take questions from the media. Please raise your hand if you have a question, and we will pass the microphone. For those attending virtually, you may submit your questions in a Zoom chat function throughout this session. We would also like to remind you to mute your mic during the presentation. Please note that this press conference is being recorded, and as we speak, the news embargo has been lifted at 10 a.m. and the latest press release and reports have been officially released. I now invite Dong to say a few words. Dong, please.
Thank you, Lin. Good morning from Singapore. Welcome to today's launch of ASEAN+3 Financial Stability Report and also our latest update to the regional outlook. So on a personal note, I began my role as AMRO's Chief Economist exactly 4 months ago on the 9th of June. So 4 months on, I have observed in close distance the region's resilience in the face of heightened uncertainties driven by US trade policy shifts and the geopolitical tensions. As compared to July, we have made an upward revision to our forecasts. Growth in the ASEAN+3 region is now projected at 4.1% in 2025 and 3.8% in 2026. This upward revision reflects robust performance in the first half of the year and a stronger than expected export momentum. Inflation has stayed low and stable. Our financial stability report finds that the region's financial system remains stable, although pockets of vulnerabilities persist. Export-oriented corporate sectors, particularly smaller firms with higher exposure to US demand, may face pressures on profit margins amid shifting trade dynamics. In other words, US tariffs may affect credit risks in the banking system in the region. Continued trade policy uncertainties in the US and the growing uncertainty around the US dollar's safe haven status could still lead to volatile global financial conditions. Despite these challenges, ASEAN+3 economies are well positioned to navigate global headwinds. Strong fundamentals, including robust banking systems, ample foreign exchange reserves, and available policy space, have provided critical buffers. With inflation subdued in most economies, central banks can maintain accommodative monetary policy to support growth if needed. As the region manages near-term uncertainties, AMRO emphasizes the importance of reinforcing policy frameworks, improving transparency, and the deepening domestic markets to mitigate spillover risks from external shocks. So with closer cooperation and integration, ASEAN+3 can turn today's challenges into tomorrow's opportunities and emerge stronger, more connected, and more resilient. Thank you. So with that, let me invite Ranchana to go through the presentation. Thank you.
Thank you very much, our Chief Economist. So let me walk you through the key findings of our ASEAN+3 Financial Stability Report, or AFSR, and the ASEAN+3 Regional Economic Outlook. Although our Chief Economist has already summarized it very well, so I will provide you with some further details. So the key highlights here is the global uncertainty, which is ongoing and expected to last for quite some time. So the global uncertainty is actually the key risk to the ASEAN+3 growth, as well as the global and regional financial markets. But actually, what we saw in terms of the growth itself, in the first half of this year, the growth outperformed our expectation. So the solid growth, coupled with the ASEAN+3 market stress, which was relatively short-lived, has proved that the ASEAN+3 region has been relatively resilient. And where does this resilience come from? Actually, it's being underpinned by two major factors. The first one is the well-calibrated policy mix, which I will explain a bit later, and the strong fundamentals. But having said that, with the resilience, we still have the pockets of vulnerability, as our chief economist already mentioned. So looking into that, with the strong growth in the first half of this year, but a lot of uncertainty going forward, even though the region is resilient, we still have some pockets of vulnerability. But that means there are some implications in terms of the policy. So the policy support that may be needed going forward to actually support economic growth as well as financial stability, it should be done prudently to preserve the policy space, as the uncertainty is still ongoing. So we could expect that there can be further shocks coming along. So we need to preserve the policy space for that. And also, with deeper regional financial integration, it can also help reduce the vulnerability from the heavy reliance on the US dollar. So talking about the US dollar, which has changed its dynamics because of the evaluation of its safe haven status, so that's going to cause some volatility as well. So regional financial integration could provide diversification from the heavy reliance on the US dollar. So let me go through on the economic side, on the aerial update. Sustaining growth momentum amid global trade disruption. On the left-hand side chart here, we're comparing our aerial in April and the forecast in July. You will see that actually during that time, when we saw the announcement after the Liberation Day, the US trade policy uncertainty actually caused significant concerns over ASEAN+3 growth outlook. And at the same time, it also caused a tighter global financial condition, which is the chart on the right-hand side, the red one. So although the tighter global financial conditions means moving downwards, is relatively short-lived, but then it's actually the tighter global financial condition that has to spill over to different parts of the world. But the situation gets better once we see the actual outturn of the data. The ASEAN+3 economy posts solid growth in the first half of 2025, supported by firm domestic demand. Here I talk about consumption as well as investment. So investment was doing relatively well, supported by FDIs, flowing into especially the ASEAN region. And exports also outperform our expectations. So export outperform our expectation because of the front-loading activities before the US tariff actually take effect. In addition to that, we have several trade deals within the region with the US that has been settled. Then together with the solid growth in the first half, the trade deals, then that leads to the upward revision to our GDP forecast. You will see in our table on the right-hand side that we paint green color into the countries where we have upward revision. This time round, compared to our update in July, most of the countries have the upward revision, as you can see from the table. And as growth uncertainty remains, especially because of the global uncertainty, inflation is projected to decline from 2024 and remain low. So this is a window of opportunity for monetary policy to be eased. And many of the central banks in the region has done so. So they have already begun cutting the policy rate to help support growth, while inflation remains low, so they are allowed to do that. Having said that, we still have a lot of the near-term outlooks subject to vulnerability and a lot of uncertainty. One of the key risks would be the more aggressive protectionist policy. Still a lot of uncertainties here on the trade side with OPEC trade deals details, as well as risk of tariff extensions to sectors like semiconductor. We have seen earlier that pharmaceutical was already subject to the higher tariff. And then at the same time, we also point out a few key risks here. More volatile global financial market, spike in commodity prices, which could bring back inflation, or slower growth in major economies, which could also bring down the overall regional growth. But having talked about the downside risk, we also have the upside risk. So the upside risk means that the GDP growth could come out better than expected, just like the first half. So the upside risks are such that if the export growth exceeds expectation and the strong FDI commitment can translate into higher investment growth, that's surely going to help with the GDP growth for the region going forward. Now let's move on to the FSR, the key findings. So our theme here is safeguarding stability amid global uncertainty and digital transformation. Our FSR have three parts. So the first part, conjunctural chapter, we will be talking about the recent development in the global financial markets, regional markets, policy response, and so on. And then the second chapter, we will look at how the global monetary policy shocks, such as during the time when Fed really accelerated this tightening of the policy rate in 2022, 2023, how it affects the region, and how the policymakers respond to it. And then the third part is equally interesting. We'll be talking about financial digitalization and its implication on the risk. So how we balance the innovation versus financial stability. So you could look into further details in the report itself. So let me go through the global setting first. The global financial markets faced heightened volatility in April, so that was around the time of the Liberation Day, but then later stabilized. However, the interesting thing is the government bond yields remain high in some advanced economies, which reflect the concerns over fiscal sustainability, the US, EU, Japan. But another thing that is quite unusual here is also the US dollar, which has weakened in the first half of the year. So as market re-evaluate its safe asset status, the dollar has weakened until it just stabilized recently. So on the left-hand side, we have the chart saying the DXY index. This is the US dollar index. Compare it against other safe haven assets and potential alternative assets. You will see that for the other asset, they have gained in value or other currency, especially in the first half of the year. Although the story is slightly different in the second half of the year. Another thing that I would like to point out is the relationship between US dollar and US Treasury yields. So on the right-hand side, you would see that there's a lot of, there's a close co-movement between US dollar and US Treasury. But since April, that close movement has somewhat broken down, and the US Treasury yields stay relatively high. Now, moving into our region, the ASEAN+3 market stress was quite short-lived. So we can see here from the left-hand side, the equity market performance, although it's differ across country, but we can see that there's a blip during April, Liberation Day, and after that, it rallied. So for those that rally faster than others, is being also subject to AI-driven semiconductor, etc. So the performance vary across country depending on the industry. And on the right-hand side, another interesting another interesting issue emerged. So normally the government bond yields in the region will be more sensitive to the change in US Treasury yields, but this is not the case. So latest, we will see that the government bond yields in the region fell while the US Treasury yields remain relatively high. So they somehow become a little bit more detached from the US Treasury yields. So this gives another different story as well. As I mentioned that the resilience in the regional financial markets, very short-lived shocks that stay, and then the difference between the US Treasury movement as well as the regional bond market movement is partly due to the well-calibrated policy mix and strong fundamentals. So in our chapter 2, we talked about how ASEAN+3 policymakers use the combination of policy tools, monetary policy, FX intervention, or capital flow management measures to mitigate the external shocks that spill over into the ASEAN+3 region. And apart from the policy itself, it is also the strong fundamental that make us absorb the shock better than several decades ago. So the right-hand side chart shows the capital adequacy ratio. For most countries, is well above the regulatory requirements, but that's not all. So the banking sector is sound. Then the external stability is also sound, with most of the countries having the international reserve way above the international benchmark. And also we have a rather deeper local currency bond market. So the previous problem that we had during the Asian financial crisis when we rely a lot on US dollar borrowing, and then that caused a lot of FX mismatch. Now with the more developed financial markets, bond market, equity markets, we are able to raise the funds within the country itself based on the local currency. So that reduces the FX mismatch risk. So over the near term, even though we remain resilient, but there are pockets of vulnerability still remain, especially those countries who may have the debt overhang. So some might have a high public debt, some may have high household debt. So that could be more vulnerable to the uncertainties that could be spilling over from the global side to each particular country. And also the SMEs who are more vulnerable to the change in the overall conditions. And then with this existing fragility, those SMEs, especially the ones who have high exposure to the US trade, could pose credit risk to the banking system as well. And over the medium term, as our chapter 3 would suggest, the accelerated digitalization, although it's really beneficial in terms of increasing financial inclusion and able to reach the underserved and underbanked and provide financial services by fintech company, digital banks, other new players. But of course, the benefits would have to be weighed with the cost. And based on our survey with the regional authorities, the main risk that is facing the overall banking system from digitalization is the operational risk. By operational risk, I mean cyber attack. I mean fraud, which has been on the rise in the region. So how do we mitigate this near-term risk and build resilience over the medium term? So the policymakers should first continue to use the policy mix well. So they can use monetary, fiscal, macroprudential FX policy. And if needed, then they will need to use the policy support to support growth and maintain financial stability. But at the same time, they have to keep in mind that they still need to preserve some policy space and the financial buffer in case of the future shocks. And certainly need to stay vigilant and take prompt action on potential market corrections. Could come from AI potential bubble, the change in the status of the US dollar, volatility that comes in to the financial market, global and regional, and all the emerging risks from the structural changes, balancing innovation versus financial stability. And lastly, we can deepen the regional financial cooperation further to help reduce the vulnerability that can come from the heavy reliance on the US dollar. So many initiatives has been ongoing. For example, regional payment connectivity, the use of local currency settlement, and so on. And also we could strengthen our regional financial safety net, such as CMIM, even further. So let me stop there. Thank you.
Thank you, Ranchana, for your very interesting presentation. Now, we will begin the Q&A session. We have received a few questions in advance. The first question is on the US dollar. Will the dollar continue to weaken for the rest of the year? And if so, what would be the implications for the region? Pak Roman, would you like to take this question?
Thank you, Lynn. Very good morning to all of you coming in person as well as those joining online. Let me briefly address this question. So on the first question on the current weakness on the US dollar weakened in the first half of this year, as also showed by Ranchana in the presentation, mainly because of the high policy uncertainty in the US, which reduced the dollar attractiveness as a safe haven asset. However, since July this year, US dollar has been broadly stable with the easing of policy uncertainty in the US, with some countries have reached the trade deal with the US. Looking ahead, if policy uncertainty remain low, the movement of the US dollar could be stable. But if the high uncertainty of the policy in the US returns, so the movement of the US dollar could be under pressure again. On the implication of the US dollar weakness to the region, as we highlighted in the last year report, our financial system in the region remain highly dependent on the US dollar. So typically when US dollar weakens, funding condition in the US dollar and it will support the financial stability in the region. At the same time, a stronger regional currency will give a central bank more room to ease their monetary policy to support growth. So in that sense, the spillover from the weaker US dollar can be a positive to the region. If the trend of the weaker dollar persists and the dollar safe haven assets continue to decline, it will create new challenges. First, the global financial might face fragmentation as market will struggle to find a reliable alternative to the US dollar. And second, without a common benchmark for safe asset and liquidity, market volatility will increase sharply. So we recommend regional authorities to promote a greater currency diversification and strengthen funding resilience to be better prepared for more uncertain and potentially fragmented global financial landscape. Let me stop here.
Thank you, Pak Roman. Our next question is from Bloomberg News, and this question is for Dong. Can you walk us through why you revised up growth for 2025 and 2026 despite the trade uncertainty and tariff headwinds? There are expectations for trade to fall in coming months given demand was front-loaded. So does that mean you don't expect as big a drop in exports, or as Asian nations will find export demand outside the US?
Right. Thank you for the question. So when we think about this question, of course, there are several channels that of influences at work. One is the familiar story that exporters, in anticipation of higher tariffs, have front-loaded their shipments. So that's part of the reason why the outturn has been stronger than we expected. There are some offsetting forces at work as well. For example, globally, semiconductors related exports have been growing strongly. As you all know, Asia, of course, is a leader in that industry. So the exports related to semiconductors and other AI-related goods have been growing very strongly. So that's a positive factor. Of course, on the policy side, as we already mentioned, that the trade deals that have been reached have some stabilized expectations. So that would also provide some support to export growth. So more broadly, when we think about the impact of how tariffs affect this region, we can think about the two effects, right? One is the direct effect. That's really more a price effect, in the sense that if tariffs lead to higher prices, then that could reduce the demand for those exports. There is also the income effect, in the sense that we have to think about how the global economy would be affected as a whole. So the income effect, in the sense that if the major economies can still manage to continue to grow despite all the tariffs, then the demand for other goods and services not necessarily covered by these tariffs would still be reasonably okay. So far, in that sense, the global economy has held up well. The major economies have been doing reasonably well despite the headwinds associated with trade policy uncertainties in the US. So that also underpinned the better than expected growth. But going forward, we still want to emphasize and caution against any complacency, because trade policy uncertainties are still high. Of course, financial markets can also become more volatile. Now there is, the equity markets related to high-tech sectors have been becoming very buoyant. Credit spreads are very tight. So, if these tides turn, then financial conditions, again, could become quite much tighter and volatile. That would dampen the growth prospect. So let me stop there. Thank you.
Thanks, Dong. Up next is a question from Itai. In the context of the ongoing depreciation of the US dollar, what are the key impacts on ASEAN+3 exports? And how are central banks in the region balancing accommodative monetary policies with exchange rate stability to maximize the buffering effect for export sectors? What do you think?
So let me start, and maybe then I will ask Ranchana to also chip in. So on the impact of dollar weakness on exports, so again, as I just explained, when we think about the impact of either tariffs or exchange rate on how exports would perform, we have two effects. One is income effect, and then the other is price effect. So let's talk about income effect. So if dollar weakness, to the extent it actually it's good for the US economy in terms of supporting its own exports, so that might actually help to cushion some of the demand of US demand for exports from other parts of the world, right? So there is a positive income effect there that could be. Now, in terms of price effect, now typically we tend to think if the dollar is weak, regional exports from Asia are, will become more expensive. That could dampen the demand for our exports. That's part of the story. That's, there can be a worry. But if you look at the details, that depends, of course, on how prices are set, because there is the dollar pricing in the sense that some exporters would actually price their goods in dollars rather than in local currencies. Then there are the price elasticities. If prices change, how that would affect the demand. So it's not a straightforward question. You cannot say that US dollar weakness in half of the year is bad for exports in this region. That I don't think the net impact is so clear-cut. Let me stop there. Thank you.
So if I may answer the second part of the question on the, how the central banks in the region are balancing accommodative monetary policy with the exchange rate stability to maximize the buffering effect on the export sector. So as mentioned in my presentation, actually central banks in this region has employed several tools to manage the conditions in domestic economy. So at the moment, with the lower inflation, the weak dollar, and the Fed rate cuts, so this provides window of opportunity for central banks in the region to ease monetary policy further, as long as they have the policy space. So with the lowering of the interest rate under normal circumstances, the interest rate differential would say that this could help weaken the currency. But because we are in probably the different environment right now where the dollar itself is weakening, so the regional currency is now appreciating. But what matters more is probably more like, are you appreciating at a faster rate than your neighbor or your competitors? So we probably cannot look at the bilateral exchange rate vis-a-vis the US dollar alone, but looking at the basket of currency to see in terms of the overall price competitiveness. And another thing that I would like to say is that we have seen some evidence over the past few years that central banks in the region have used actively foreign exchange intervention as another tool to deal with excessive volatility or rapid movement in the exchange rate. So they are able to do that while at the same time supporting the growth using monetary policy. Thank you.
Thank you, Dong and Ranchana. Our next question is from central banking. The report mentions ample policy space for regional central banks to respond to possible ongoing shocks. How long is that policy space expected to last? Do regional central banks have policy space to respond to potential shocks like a significant slowdown in AI/technology equities? Ranchana, you would like to take these questions?
Okay, so we would say that we have several tools available, right? So monetary policy is not the only one. And of course, right now that we are on more of the accommodative path of monetary policy, that could be targeted to help support growth if anything happens, in the equity markets, etc. But at the same time, we can also activate the stabilization tools, like it has been done before during the COVID time, the market stabilization tools and so on, if anything that's actually happening to the financial markets and cause excessive volatility or loss of the valuations.
Thank you, Ranchana. Our next question is from Nikkei Asia. So Sanae Takaichi has won the LDP leadership and is set to become Prime Minister. How do you assess her economic agenda and its likely effects on Japan's growth, fiscal trajectory, and the path of monetary policy? Ranchana, what do you think?
That's a very interesting question. But before I answer that, we would like to congratulate Sanae Takaichi for being elected as the new leader of Japan LDP party. And she is expected to be elected as the Prime Minister as well. But this also depends pretty much on the possible new coalition agreement in terms of the policy. So a lot of analysts would say that she's more on the expansionary side of the fiscal policy and a little bit dovish on the monetary policy. But to be fair, I think we need to really see the actual policy formation and also how it could impact the overall economy. So more like wait and see. So I don't want to comment right now because we haven't seen the actual policy coming out yet. But in any case, the near-term challenges for Japan is that how we can balance the commitment to fiscal discipline to keep public debt in check, as we know that public debt in Japan is relatively high, and to make sure that we have sufficient fiscal support to maintain the growth momentum. So balancing the two will be a very, is a very challenging task. But at the same time, top of mind for people is the cost of living issue as well. So how to balance the fiscal discipline with fiscal support to support growth, and then at the same time address the cost of living issue. So this is a very challenging fiscal monetary policy mix going forward.
Thank you. Our next question is from Kiwi Post. What are the key drivers for the revised lower GDP forecast for Cambodia this year? Do you foresee the continued border tensions with Thailand impacting trade and tourism? How do you view the high NPL rate in the banking sector, and what are the risks to the economy? Dong, what do you think?
Right, okay, thank you for the question. Cambodia, of course, in the ASEAN+ region is one of the few economies which have very large exposure to the US markets in terms of its exports, particularly garment, footwear, and the travel goods sector. So of course, the downward revision, even earlier in the last round of Cambodia's growth, reflected the very high tariffs that were planned to be imposed by the US. Of course, the negotiations led to a reduction in the tariff earlier, and the latest, it's settled down at about 19%. So of course that's positive, but still 19% is a much higher tariff rate than April, when these reciprocal tariffs rates were imposed. So that would certainly dampen growth, given Cambodia's large exposure to the US markets. That's one factor. The other factor, of course, as you know, that there was this Thailand-Cambodia border conflict, and through the channels of migrant workers returning to Cambodia, as you know, since the conflict took place, close in 0.9 million migrant workers have returned from Thailand to Cambodia. So remittance flows would be affected. And then, of course, the tourism is another channel. As you know, that Thai tourists from Thailand actually were the top source of tourism for Cambodia. That would be affected. And border trade, even though it wasn't particularly large, would be affected as well. So taken together, the conflict, I think we figure, would shave the growth forecast by about 0.3 percentage point. So given the impact of the higher tariffs, and the border conflict, that's why we revised downwards for Cambodia in terms of growth. Now, the banking sector non-performing loans issue, that has been with us for a couple of years now. As we know, this, in a way, the realization of some of the non-performing loans was a result of the, for example, some of the pandemic. During the pandemic period, there was regulatory forbearance. Once that was lifted, some of these non-performing loans came into the surface, and that's an important drag, we think, that has to be resolved as a legacy issue for the banking system to look forward. So the lending capacity can be larger if the non-performing loans were resolved. So there are various ways of doing this. Importantly, we think that strict enforcement of regulatory rules, recognition of non-performing loans, there may be some mechanism to resolve these non-performing loans through the idea. For example, there are various ideas. Of course, one of them is to think about the role of the asset management company. All of these can help the banking system manage the problem.
Thanks, Dong. We have a question from Manila Bulletin. For the Philippines, the growth forecast was retained at 5.6% in 2025 and 5.5% in 2026. If these forecasts materialize, growth would be on a downward trend from 2024's GDP growth of 5.7%. What factors were considered in retaining these forecasts? How significant in terms of percentage points is the drag from the flood control, scandals, and the planned extension of the 2-month rice import ban. What do you think?
Should I?
Yes.
Ranjana, would you like to take the question? Or?
Okay, let me try first. Maybe you would like to chip in later. So actually the forecast for 2025 and 2026, there's a slower growth than 2024. Is partly because of the weaker export, just like any other countries in the region, where we expect that the impact of the US tariff is going to kick in towards the end of the year and next year. But we still expect that the consumption is going to grow quite steadily, supported by the strong labor market, lower inflation, and also the still robust the remittances as well. And private investment, sentiment and export performance are the ones who probably moderate the growth a little bit because of the external uncertainty related to the US tariff. In terms of the scandal, I think we would have to see to what extent it's actually going to affect the wider economy. Because if the event is short-lived and then it does not severely affect the investment sentiments, then that could be contained and may not affect the growth forecast materially. So we still wait and see the overall impact.
Let me just add a couple of thoughts to that. I think the Philippines, we actually just concluded our annual consultation visit last month with the Philippines. In terms of at the macro level, I think the Philippines economy actually has been performing quite well. Growth has been steady. The issue is that there has been a downward shift in the growth trajectory as compared to pandemic levels, right? The pre-pandemic levels, the Philippine economy was growing much faster. So the challenge really is, while maintaining short-term stability, how do we lift the medium-term growth to higher levels? And there, I think the conclusion of the consultation is that investment should really be much higher to underpin the productive capacity in the medium term. It's both public spending and public investment and the private investment that should prepare the Philippine economies for two major shocks that could hit the economy going forward. One is climate risks, right? The Philippines, because of its geography, is quite exposed to climate risks. So infrastructure really has to be strengthened. Some of these issues with flooding and has to do with the infrastructure not being able to deal with these shocks, and that can be strengthened much further. And the second one is that, as we know, Philippines is a very service-oriented economy. It plays an important role in service exports, for example, business processes, call centers, and all this for major global corporates. The Philippines provide very good services there. But looking, in the age of AI, how do we upgrade these services? So that would require also upscaling of the human resources in terms of public investment and also private sector investment. So these are the issues that I think would prepare the Philippines economies for these big challenges ahead. Thank you.
Our next question is on financial digitalization. What are the key financial stability risks from financial digitalization? What do you think, Ranjana?
Actually, we deal with this in our third chapter, so I encourage you to have a look at the report as well. Well, certainly with the financial digitalization, it brings benefit. At the same time, it can pose some risks as well. So by benefits, as I may have mentioned during my presentation, that it increased financial inclusion. It allows people, gig economy, SMEs who never had the credit record before, to be able to access the financial services. But that means that with the digitalization, we have more players coming in to the banking space. So we will have fintech, big tech, and so on, and the e-commerce platform who could also come in and compete with the traditional banks. So with that intense competition, that can, I don't say that this is all the cases that will apply, right? With that competition, that can increase credit risk because all the participants would want to gain more and more market share. That's one thing. And then another thing is, as we have seen in the events during the in the US, where if there's easy transfer using digital and so on, you don't have to go to the bank branches. So it's easy to move your funds around. So if something that triggers the confidence, we can have the liquidity risk facing the overall banking, well, not the overall banking system, but especially the ones who facing the risk there. And more importantly, what we are quite concerned is that the risk that's coming from cybersecurity as well as the fraud, which has been on the rise, especially in our region. So, yeah, so that will be my answer. Thank you.
Thanks, Ranchana. We will now start to take questions from the media who are with us in the room. Please identify yourself and your news organization before asking your questions.
Hi, good morning. I'm Hưng from Vietnam Television. So I would like to have your comment focus more on Vietnam. So as we see in your forecast, Vietnam growth this year to be 7.5%, and the inflation also relative high, 3.3%. And I'd like to have comment, what are the key growth drivers of Vietnam and the challenges ahead in terms of financial stability? Thank you.
Don, what do you think?
Thank you very much. Thank you for coming. Vietnam, of course, has been a star economy in the ASEAN+ region. Its growth has been the highest. Of course, the government, the Vietnamese people are also very ambitious. There is the plan to achieve double-digit growth ahead. I think at the moment the challenge is to think about how the export sector would evolve, given, as I mentioned earlier, in the region when we think about exposure to the US markets, Cambodia and Vietnam stand out. Of course, the trade negotiations have been conducted quite skillfully, and now the tariff rates are much lower than earlier sort of planned. So that would, in a way, stabilize some of these, stabilize export performance, hopefully going forward, if there's no more uncertainty on that front. Although I would point out there's still some uncertainty on the transshipments part, how that would be implemented. But looking forward, I think it's important for the Vietnamese economy to diversify export markets, upgrade its industrial structure to increase the domestic value added of exports. So I think it's important to think how to leverage new FDI to upgrade the production networks so the Vietnamese economy can benefit more locally from these FDI, and that would be the challenge. And one part of that consideration, of course, is to invest in infrastructure and invest in upscaling of the labor force. All these issues would be important to underpin the higher growth ambition of the Vietnamese people.
Thank you, Tom. Thank you, Hong. Any more questions from the media in the room? If not, we will now turn to our live questions. Our next question is from Lianhe Zaobao. Can you share about how the potential sectoral tariff, example semiconductor and pharmaceutical tariffs, may impact ASEAN, particularly Singapore? Gold price has also been on a rise. How would that impact the financial stability of the region? What do you think?
You want to answer the question on Singapore? You are the mission chief for Singapore.
Okay, so we actually still assessing the impact of the tariff on pharmaceutical, right? That came out recently, but we think actually we has revised down the growth, especially for next year, from our previous press release on Singapore, where we conducted the annual consultation visit. That was in early September from 2.0, but now it is 1.7. This is because of the pharmaceutical tariff. But of course, that's still ongoing discussion, as I understand it, that the trade deals are not final yet. So we're still hopeful that in terms of the impact on the pharmaceutical sector in Singapore will be not as bad as it be envisaged, even though pharmaceutical account for 1/3 of the export to the US. So that's on pharmaceutical, and of course with semiconductor, that could be another risk that's coming along. But of course we would have to consider Singapore as part of the global supply chain as well.
Let me say a few words about gold, since there was a question, second part of the question, gold. So gold prices, of course, have moved up quite briskly. I think that's a reflection that both the public sector, including central banks as the reserve managers, and other private sector are probably diversifying into an asset typically in the past has been associated with a lot of uncertainties. So in the environment of heightened uncertainties, gold tends to be an asset that attracts some reallocation into, so that it probably explains some of these movements. On the other hand, I think, as we know, an asset with limited supply and very difficult to underpin its value tends to move in a way that may not be sustainable. So one, from a risk management point of view, we always have to think in case there is an adjustment or correction, how that might affect your own portfolio, or from a risk management point of view, one has to be also cautious, not to rush into an asset that everybody thinks is going to appreciate, because fundamentally it's very hard to put down a value or what is an appropriate value for gold. So that's a very hard question. But overall, I think on the one hand, we acknowledge that this can be an asset that can have desirable properties in the age of heightened uncertainty. On the other hand, it could be subject to a lot of volatility.
Thank you. Our next question is from Radio Television Malaysia, and this is for Dong. Given the current global uncertainties, especially around US trade and monetary policies, how resilient are Malaysia and the ASEAN region's financial systems according to AMRO's latest assessment? What key vulnerabilities should policymakers pay attention to?
So Malaysia, of course, the growth has been quite steady as well, so inflation is also quite low and stable. Now, the issue for Malaysia is that I think it's very plugged into the electronics sector, and its exports, of course, are also very large vis-a-vis the GDP. So I think for Malaysia to underpin the medium-term growth prospect is really to think again how to leverage ASEAN as a much larger playground to be much more integrated with both ASEAN itself, but also from the +3 economies. That's from that's Japan, Korea, and China. because these countries are already technological leaders in a number of industries. So we can think, for Malaysia, how to upgrade its infrastructure. Of course, there are attempts, for example, the Johor, Singapore Special Economic Zones. That's a very good, promising project. And we understand that data centers, of course, have been a major investment activity in Malaysia. I think the challenge ahead is really to think, with AI and other green technology becoming much more important, how Malaysia would be able to leverage its already formidable production capacity and become more integrated, both in ASEAN and with the plus economies. So that would put Malaysian economies on a much stronger footing and also more resilient.
Thank you. We have a few more questions. This question is from Bloomberg, and it's to Dong again. There are two parts to this question. Are we past the worst of US tariff uncertainty for the region? We now have the reciprocal tariff list, some trade deals made in the region, talks with China ongoing. It seems that things have broadly held up better than expectations. Number two, on China specifically, can you discuss what led to the increased growth forecast? You noted stronger consumption trends and factory activity. Does that mean you see continued strength in industrial production and consumption?
The second part of the question is on China, right?
Yes.
Okay. So the first part of the question, of course, is we are not, again, as I said in the July press conference, we are not privy to the negotiations. Even though some of the trade deals have been reached, and I think these are reasonably good outcomes, there are still other trade deals that are still being negotiated. How the outcome will be, we don't know. I think one can tell, even from the recent, in late September, the imposition of 100% tariff on pharmaceuticals, we can tell is that trade policy uncertainties coming from the US is still pretty high, I would say, despite some of the trade deals being reached. So we should not let our guard down. So that, in a way, as you could see from our update to the regional outlook, we list that as the number one risk. The number one risk that is still continued trade policy uncertainty. So I wouldn't say we have seen, we would be more comfortable with a more stable. I don't think we are there yet. On China, I think the economic growth has been steady. Actually, the first half of the year, of course, turned out to be better than expected. So that explains also some of the 0.3 percentage point upward revision in our forecast. Export sector actually has turned out to be a bright spot for the Chinese economy. For domestic demand, I think we do see a little bit of a two-speed situation, in the sense that the sectors with emerging technology, and the activities are very brisk. Active investments going on. At the same time, the more traditional sectors, particularly on the property and construction related, I think property market has stabilized, but we do see some differentiation between different tier cities, and in the larger cities, of course, the market has stabilized. In the lower tiered cities, there is still an overhang of stock that needs to be worked out. So that would, but we already see some very positive movements there. So broadly speaking, we think that the Chinese economy is on a steady growth trajectory.
Thank you, Dong. We have now reached our final question. With many uncertainties ahead, how will ASEAN+3 navigate these challenging times? Park Roman, would you like to take this question?
Okay, thank you very much for the question. Yes, we are indeed navigating through every very challenging period with the rising global uncertainty over the US trade policy as well as the ongoing geopolitical tension. However, we are quite confident that the ASEAN+3 region is in a strong position to weather these challenges. Let me highlight a few reasons why. First, most of economies in the region have a solid economic buffer, including the adequate foreign exchange reserve, well-capitalized banking sector as outlined by Runcana in the presentation, as well as a generally healthy corporate and household balance sheet. Second, policy space remains available in most economies in the region. Inflation across the region remains quite modest, while the pressure on the FX market also has eased. So it gives more room to central bank to adjust their monetary policy to support growth if needed. So this strength actually give a confidence for the region to weather the external shocks. On the fiscal side, most economies in the region also have space to deploy the targeted support to cushion the impact on the vulnerable sector as well as household. Some economies have undertaken policy measures, cutting the interest rate and also introducing some measures to cushion the immediate impact of the tariff hike. Lastly, our region cooperation continues to be the key sources of strength. The mechanism of financial support and also policy coordination enhance our collective resilience and also enable better coordinated policy to respond the shock. So while the uncertainty remain high, the strong fundamental, the flexibility of the policy we have in the region, as well as the deepening cooperation in the region, give us confidence that the ASEAN+3 region can navigate the challenges effectively. Thank you.
Thank you, Tong, Park Roman, and Runcana for your incredible insights today. Ladies and gentlemen, we have come to the end of today's press conference. Thanks for joining us. If we missed your question or if you require more details, please email us at media@amro-asia.org. You can visit the AMRO website to download the reports, press release, and today's PowerPoint presentation. Thank you and hope to see you soon.